Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. It has been some time that I've been on set, but exciting things have been happening, not only in the world of football, but as well as in the world of investments, our world that is. The main topic today is the National Investment Fund Holdings Limited. And the National Investment Fund, let me start by saying we have received much more information over the past week or so as to how it is going to be comprised and or issued. Let me start by saying that originally the National Investment Fund was intended to be a participation in a pool of shares by investors, equity participation, or direct shareholding in the National Investment Company Holdings Limited. That has been set aside for really what is a bond. And investors have been asking to get some clarification as much as possible, even before the prospectus is out, to speak to the question of what is this investment and what's in it for them. I'm going to try to explain some of that today, and later on the week probably I'll come on set to have a discussion with Hema and answer questions that may arise. Let's start off with what this is all about. Essentially, a company, the National Investment Fund, is going to be set up, and into that company, the government is going to put several shares into that company. And what are these shares? Let's have a close look and see what these shares are. Well, we'll get to the shares. First of all, would amount to some $7.9 billion in value. And they would comprise the Republic Bank, which is about 55% of the value, Whitco, another 5% of the value, One Caribbean Limited, 2% of the value, Angostura Holdings, 12% of the value, and Trinidad Generation Unlimited, which will be approximately 26% of the value. What does this mean? It means that this is the portfolio of holdings of shares that the National Investment Fund Company Holdings Limited will actually have in its portfolio. Now, the National Investment Fund is then going to issue bonds to investors. So these bonds will comprise a series of tranches, 5-year bonds, 12-year bonds, and 20-year bonds. So let's turn to our next slide, which will give you a perspective on what these bonds are. Well, the next slide is supposed to actually show that the $1.2 billion will be issued in the 5-year bond, and $1.6 billion will be issued in the 12-year bond, and a further $1.2 billion will be issued in the 20-year bond. And what that says to you is that these bonds, the sweetener to these bonds, is that in the hands of persons who are subject to tax, they will receive a tax-exempt holding, and therefore the tax equivalent of the bond will rise. Now, according to the Minister, those persons who are subject to income tax, individuals, they are already exempt from the tax, and therefore you would be indifferent in terms of what the gross taxable rate is as opposed to what the rate on paper is. So let's talk a little bit about the process. We may come back to the whole question of the size of the bond issue. The company is established. The government transfers $7.9 billion worth of shares into the company, which we have already shown. Then the government is issued a promissory note by this company, NIF, National Investment Fund. And upon the closure of the bond, the National Investment Fund, if it does raise the $4 billion, will then make payment to the government of $4 billion, so that its debt obligations to government is going to be reduced by that amount. And then the remaining amount, which is about $3.9 billion, will be an issue of shares to the government. This company, the National Investment Fund, is going to be 100% or wholly owned by the government of Trinidad and Tobago. The bond issue will be an issue of the National Investment Fund, not the government of Trinidad and Tobago, as has already been clearly articulated. What's in it for you as the investor? We'll talk about that now in a moment. Well, we talked about a while ago what the tranches comprise. What's in it for you as an investor? Well, the potential upside that obtains in equity, as was the case with FCB and as was the case with TTNGL, is not there in a bond as it is in equity. Of course, that also comes with the downside. So there is no participation, no ownership of a particular share or a pool of shares for you as the investor. The real benefit comes to some of those companies that are taxable in nature. And I'll talk a little bit, let me talk a little bit about why the tranches. The 20-year is more aligned to the needs of insurance and pension funds. The 5-year is more aligned to the investment of, in terms of corporates, the banks who would benefit paying 30 and 35% of taxes, as the case may be. They will benefit because of the gross up in taxation. Let's look at this gross up in taxation, and let me see how we can explain this. At the 5-year, the bond issue is 4.5%. If someone is paying 30% tax, the taxable equivalent is 6.4% or 6.9%. As you go out further, you will see these factors as well. For more details, go to our website at bourseinvestment.com, which gives a much clearer view and a much more detailed view of what is happening. So what you see is that investors at the 20-year, when grossed up at 35%, will be 10.2% equivalent. I stress you do not own any shareholding, you own the bonds. Let's look at the question, which has come up over and over again, is whether there will be sufficient absorptive capacity in the system for $4 billion worth of bonds. And the highest participation or subscription for participation has been $3.3 billion, and this is in the first IPO. And as you would see, those applications for subscriptions, the blue bar, has gone down and continues to go down. So the question is in whether that $4 billion will be raised. If not, what next? I'm going to talk a lot more about this over the next week or two, but for the time being, let's close it there. And let me say, have yourself a wonderful investment week. And this has been the Bourse Report.